Hi everyone, let's go over my medium time frame, low time frame and micro bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario where we are looking for a zigzag 535 to the downside, where now we're working on a wave C where the most common target for wave C is between the 1 and the 1.236, which is between 27.2k and 26.5k, which also has some nice additional confluence with my target boxes over here. The first one between 26.8k and 27.4k, and the one at the bottom between 26.2k and 26.5k. Now in this scenario you also see fib times. These are the vertical lines on the chart taken from the high to the low of A to the high of wave B to compare the time it took to develop wave A with the time it takes to develop wave C. Usually wave C is a little bit more lazy compared to a wave A, so it tends to take a little bit more time and therefore end after the 1-to-1, which is now positioned on the 19th of August, 6 p.m. Central East European time. Now wave C is a 5-wave structure, so we have to look for impulses over here, and if we then zoom into this structure over here, then what we are looking for is a leading diagonal in a wave 1 and then a zigzag over here in a wave 2. And yesterday in the group very early already, KG posted this where you can see the diagonal that we were looking for over here, a 5-wave structure to the downside where all the waves are zigzags, so a leading zigzag scenario that is, for then a wave 2 to the upside in a typical ABC zigzag, then looking for either more downside in an impulsive structure or a continuation of the correction for then a move to the downside. In this particular scenario, we are then having the scenario where we look for continuation to the downside. So we then have wave 1, wave 2, where a zigzag also, by the way, is the most common corrective structure in a wave 2. Wave 2 retraced to the 0.5 Fibonacci taken from the high to the low of wave 1, which also is a common target for a wave 2, and the invalidation is if price would take this high again. But that does mean we first of all want to see impulsive structures to the downside and potentially then a 1-2 and then somehow another 1-2. This looks very 3-wavy at the moment on the lower time frames, but you want to see impulsive structures to the downside and also volume increasing while price is moving to the downside. But more importantly, if we look at fib time, you can see I have the 0.382 on the chart, also taken from the high to the low of 1, to compare the length it took for wave 1 with wave 2, and you can see that this wave 2 in time is incredibly short. Usually corrective structures are finishing after the 0.382, but clearly this structure did not finish after the 382. It even finished before the 146, meaning that the time of this wave 2 is not even 15% of the time it took to develop wave 1, which is very short in Elliott Wave terms. Now after a diagonal though, you can get sharper and shorter corrections, but you know, time wise it is something we at least have to think about as Elliott Wavers. Now if we then look at what's been happening over here and we go to the micro scenario, we are then looking for a 1-2 and then again a 1-2 continuation. So if we go to the 15-minute, what you want to see is impulsive structures. Wave 1, sideways 2. This wave 2, by the way, is 14 times longer than wave 1, which also is incredibly long. And then you look for another impulse to the downside. Now, at the moment, this looks a bit like a 3-wave structure over here. Of course, this can then be a potential 1-2, 1-2. But then the second wave 2 over here is much longer than the first wave 2, which is not really something you like to see. Usually, you like to see a 1-2, 1-2, 1-2, where then each wave 1 and each wave 2 is shorter than the previous one, creating some sort of a contracting diagonal. So that doesn't look great, but what is more important is that currently price is right on top of support. I was talking about the support level for a while between basically 29k and 29.05 or 29.1k. And price over here hit the daily naked point of control perfectly at the high over here of this target box. It actually just missed out on hitting the daily just below on my chart at 29.040. But you now want to see price going down. You don't want to see market structure change, and the invalidation of this more micro scenarios if price is going to take the high over here. For me, it's much more important at the moment to observe the reaction at this target box and what we see more like locally, which I'll talk about like at the end of the video. compared to is this an impulse or not, because it looks like a three-wave structure at the moment, but it is on high volume. More about that coming. If we then zoom out again and go to the low time frame, like bullish and then bearish scenario, so we're first going to look for more upside. Then in this scenario over here, we have that same wave 1, but now wave 2 is extended in a bigger three-wave structure, where an interesting resistance area is the double top at 29.7k in confluence with my blue resistance area over here, which is between 29.7 and 29.8k. Also the golden pocket over here for some nice confluence, and then you expect a potential move towards the downside. Now that means that this wave 2 is now going to be longer than the 0.382 fib time taken from the high to the low of 1, which is something that usually you want to see. That is most common, at least. It's most common that a corrective structure goes past the 0.382 of the previous impulse for then the high of wave 2 here and a continuation to the downside. That does of course mean that we need to find support in this area for a move towards the upside. So what we're then looking for is a three-wave structure, because we're then looking for a wave A, potential B, C, or we're looking for a WXY. It doesn't really matter for the A, B or a WX, because in both scenarios we're looking for a 3, 3, and then either the move up is 5 or the move up is 3, but that is yet to be seen because we're moving down, right? So in the second scenario, either B or a wave X, we're then looking for a three-wave structure to the downside, and you can see I labeled it as a wave A, B, C. This looks very much like an impulse on the very low time frames, but this one over here is a little bit weird, right? Because you can't really count this as a nice impulsive structure to the downside as a 5-wave move. If you count this as a 1, 2, 3, 4 and then a 5, there's overlap between the low of 1 and the high of 4. However, by the way, now that I say this, I do remind myself that you can count this as over here a wave 1, then a 3-wave 2, for then a 3 to the downside, so 1, 2, 3, then you have a sideways 4, and if you take this over here as the pivot of 1, or this low as the pivot of 1, maybe even this one, then there is no overlap with a wave 4 over here, if this is then a wave 4. So this could still be an impulsive structure to the downside for a wave C, where this wave C definitely takes longer than wave A, and you really want to see the target area, most common target area for C hit between the 1 and the 1.236 over here, which is between 0.30 and 28.922 over here, and the most common target area for a wave B is between the 1.236 and the 1.38, which is just a little bit lower, between 28.932 on my chart and 28.851. So this remains a very important area, and as you can see, price didn't hit the common target area for a wave C and also didn't hit the common target area for a wave B. It actually just missed out on hitting the 105 as well, which is a rare target for a wave B, but it does find support. So it's all about observing what is happening more locally. A rare target for a wave C is the 0.618, and clearly the 0.618 has been hit, but not very nicely respected, as you can see, which doesn't look like too great. So yeah, this is still important. If price comes to the downside, still very, very important support over here, including the daily and also a time naked point of control at the lower end of my target box. If we look at the CVD divergences, then we have both the bearish and the bullish CVD divergences going on over here. So bearish CVD with the previous high move to the downside, so lower high on price, higher high on CVD. And I call it previous high because this is a high that was made on the left side of the drop. And I usually prefer to at least look on the right side of the drop, but this is something we have to keep in mind. And of course, it's not really something you like to see if you're very bullish, right? Like preferably in CVD divergences, you want to see then some structure, retracement, bullish CVD, but you don't want to see bearish CVDs as well before you then get that bullish CVD. And also, with the bullish CVD divergences we currently have, this low was made over here on very high volume, which lowers the probability that this CVD divergence is going to play out. Of course, it can play out, but we play the probabilities. No, it's a probabilities game. Also, the bigger bearish CVD divergence between the high over there at the left top and the lower high that was created has played out. Lower high on price, higher high on the CVD, as this low over here now got taken with the touch at the target box. So If we then look at the news, we do have news today, 8 p.m. Central East European time. So make sure you trade safe. Like the news is the minutes. So I'm not sure if there's anything new or great volatility, but it's good to know about. And then finally, the probabilities of the different scenarios. Then on the medium time frame, we're of course looking for that bearish scenario, looking for more downside. On the low time frame, if we think about time, it makes more sense from an Elliott wave point of view to extend the wave 2, because this correction over here is so short in time. But that of course depends on what we see locally, and on the micro at the moment it looks more probable for the low to be taken once again. And you see I wrote 3 minutes as well, because if we zoom in to this structure over here, then you could say, okay, we have some sort of a leading diagonal over here, and in a leading diagonal all the waves have to be 3 waves, or you look for a 53535. But in this scenario, if we're looking for like a 53535, this wave 2, and both also in a 333, if this is then a wave 2 over here, it's a expanding flat, which is not allowed. But you also don't really like to count this as a wave 1, like this pivot high, because this looks more like a 1, correction, 2, correction, 3, but then this would be an expanding flat, not allowed, because you're only allowed to have zigzags in leading diagonals. We also then have those bearish CVD divergences more locally. The low was made on high volume. So yeah, currently on the micro, the probabilities from an Elliott wave point of view are higher to take the low again. And if we do take that low again, we observe, of course, the reaction, and then we take it from there. And if price continues to the upside, absolutely fine, right? It's probabilities. But yeah, these are the probabilities from an Elliott wave scenario. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.